I'll just give you some perspective on this. The losses for the first half of 2011 are more than 5 times the first half annual average for the last 10 years.
There's been huge, what we would think huge catastrophes in terms of losses. They haven't necessarily affected the major reinsurers that much, and so whether they're big enough to drive up rates is questionable.
What you're seeing of the regulatory issues that are affecting are coming up post-Hurricane Irene and waiver of the hurricane deductibles that are out there. So I think you're seeing a lot of issues where insurers have waived the hurricane deductibles, and you may see some reinsurance issues that come out of that in terms of should they have done it? Was it a business decision? Does the reinsurer have to follow the fortunes on those issues?
Our view is that you'll hear a lot of commentators talking about rates. A lot of them aren't the ones that are putting capital to risk. We're looking for the rate increases that we saw through the mid part of the year, 10%, to continue through this year and through the January 1 renewal, and that's certainly what we'll be asking for before we expose our capital.
Our expectation, therefore, is that in the absence of a significant loss event, we expect the global market to drift, but without substantial decreases for the 2012 renewal.
Inevitably, you look at areas like Japanese earthquake, New Zealand earthquake. Of course, there has to be price increases. But I think for many lines of business, it may be business as usual, maybe prices renew as flat.
I think many commentators are thinking 2012 could be a busier year for M&A.
Uncertainty equals risk, which for us, unlike virtually any other industry, equals opportunity.
There's a lot of interest in reputational harm insurance and a lot of interest in contingent business interruption and where it can go to ensure supply chain interruption insurance, especially post-Japan where you have losses without any physical damage.
I think actually it's about product, it's about territory, but it's actually also maintaining your disciplines and actually growing in areas where you have the specialism. I think we do have the view that clearly there are opportunities. You must have the skill sets to be able to deliver.
Our belief is that growth through acquisition is going to be very difficult in an environment in which stock and credit markets remain in turmoil. And we think that the pace of deals for the remainder of 2011 will remain low.
There's been a lot of press recently about the potential merger of Transatlantic with Allied World, with Validus, with Berkshire, and I think there are more conversations starting to happen amongst other players, so we may see more action in 2012.
So M&A activity in insurance and reinsurance has certainly picked up over the past 12 months. Our firm has been involved in a number of transactions that have closed in 2011, and from our perspective there could well be a number of transactions that close in the near term.
It's been an interesting conference, I think.